Samantha, have you changed your price forecast given that it doesn't look like the situation is getting any better? And we saw gas prices up 43% last week, just in a week.
Yes, absolutely. Last week was actually a double whammy for European natural gas because we got the news that the Freeport outage in the US, which is a facility that exports LNG to the rest of the world, had an extended outage, initially thought to be 3 weeks long and then announced to be more like 3 months long out of the market, followed by the Russian cuts to Europe in their exports. So we did raise our forecast for Q3 from 85 euros to 104. We've seen prices at around 120, 125 euros so far this week. And in our view, the key to where prices go from here is really in the duration of these supply cuts from Russia. If you have a situation where it's a short-lived outage and volumes can come back to the market when the pipeline goes fully down from to maintenance, Nord Stream 1 in mid-July, then that's a more manageable situation. But extended cuts through the end of summer, or even worse, through winter, would actually pose a significant upside risk to prices much closer to 200 euros.
Wow, that's a phenomenal forecast. Tell us a little bit about Germany using coal again in order to get around some of these problems. Is that a sustainable strategy?
The government has announced a plan to use additional coal generation for about 2 years. That timeline is actually consistent with the period when we expect balances to remain tight. We look at the natural gas balance in Europe now, and frankly, it doesn't get a lot better into next year or 2024. So that type of 2-year timeline, I think, makes a lot of sense. The restart of coal capacity can definitely help. It can reduce natural gas demand at the margin, but on its own, it's nowhere near enough to really offset the loss of supply.
How big is the issue in terms of the competitiveness of Asian buyers at this point for these precious cargoes?
That's such an important point because year to date, I would say Europe has gotten lucky. The China COVID lockdowns have actually freed up a lot of LNG cargoes to head to Europe and improve the supply situation there. This is part of the reason why European storage has recovered so well summer to date. But this is not a guarantee going forward into the summer, much less into the winter. If you have hotter than average summers, we have already seen in the past that demand does pick up quite significantly in Asia. And we are already seeing some signs of that. We know that India has gone through blackouts, Pakistan, Bangladesh. So countries that were avoiding buying in the spot market are now more active in the spot market because they have no choice. And going into the winter, you have a lot of other countries, those that are usually most affected by colder weather, like China, Japan, South Korea. They want to prepare for the potential cold winter ahead. So they will build stocks of natural gas. They will prepare and pre-buy a lot of LNG. So there is potential for a lot more competition for LNG versus what we've seen year to date.
Is a price cap or rationing, supply rationing, the key here? And do you see seasonality creating any kind of alleviation prospect in the months to come?
So price caps don't necessarily help, right? Because if you force prices to stay where they are, effectively you're incentivizing everybody to keep consuming what they've been consuming. And when there is no supply, that just doesn't add up, does it? So when you bring up the option of rationing, that becomes the solution when there is not enough of an offset to that loss of supply. So it is a risk going forward. We need to see how much demand will drop given the recent rising prices that we talked about. We've also heard from European governments that they will try to incentivize industrial consumers to buy less, effectively paying them to buy less natural gas and leave more available for storage. So that could help as well.